Good morning. Mike Vacchi, Princeton Trader, here for nakedtrader.com. Here with your pre-market webcast for Thursday. So yesterday, big down day again. I think that's 8 in a row, maybe 9 in a row. It's a lot. Yesterday we lost all those key support levels that we have been looking at, all the way down to the 317, the March 17 low at 1241.25. And basically for me, on a draft down day like that, when things start really careening lower and you lose that last level of support like we did below 41.25, it becomes what I like to call a psychological market. A psychological market means I don't care what the fibs are, I don't care what the pivot points are, where the moving averages are. The thing wants to sell off. You have to let it get it out of its system, and there will be a time as it's headed lower that you get a nice long candle on a 5-minute chart that will let you know that you can get back in. I posted yesterday at the Top Step I Am, and I think it ended up on Twitter. I think Jill put that up. That I will gladly sacrifice the first 3 handles on the real bounce when the market is doing that, rather than trying to grab knives all the way down. Because there were lots of times yesterday where things would pause and you would think, oh, well, maybe this is it. You lose 2 handles there, then you lose another 2 handles, lose another 2. Then by the time we get down to 30.25 and it's time to buy the real one, you're already down 8 handles. And you know what you want to do? You don't want to buy. You want to curl up under your desk and start thinking about tomorrow. So, we hit 30.25 and we moved a little higher. I didn't get in until about 15 minutes later. I got in at right around 34 or 35. But it was a 20-plus handle move. So you have to ask yourself, will you give Mr. Market the first 3 or 4 handles to get the next 15 or so handles moving up? I think the answer to that question is yes. The other big question I wanted to answer was whether or not this market was one that wants to trade below the 200-day moving average. I think it absolutely is. I think that we are in a market now that wants to trade below the 200. That means rallies need to be sold. Our first example is what happened today. We rallied up as high as 12.57, 12.58 yesterday. Made it up as high as the 3-day pivot in the early hours this morning. Traded 12.64.66. We get negative comments out of the ECB, and all of a sudden we're not at 12.64. We're down at 12.36, and we are currently trading 12.39.75. So just be aware. This is not a time to put your bull hat on. This is a time to be very cautious. It's a time to be very skeptical about rallies. And you can still buy dips, but you absolutely must sell the rips. You have got to sell the rallies, because this is a market that wants to be below the 200. That may change in a week, it may change in 2 weeks, it may change in 2 months. But for now, this is the environment that we're living in. You have got to adapt. So, support and resistance for today. Let's look at support first. 35 is my first support level, then yesterday's low at 30.25. I've got minor support at 12.24, and then I've got a little bit better support down at 12.20.50. On the upside, 42.50, 12.42.50, then the 12.47.41 daily pivot, 12.53, 12.57, and back up to the 3-day pivot, the overnight high right around 12.64.66. The 200-day moving average is sitting up at 12.73.87 today. Do I think eventually we get a date with that moving average for kind of a high noon event? Yes, I do. I think we will get up that high, and then the market will decide what it wants to do. We will visit the 200-day moving average. Maybe not today, maybe not next week, but I think as the summer plays out, we're going to go up and see the 200-day moving average, and the market is going to decide what it really wants to do. Have a good day. Stay small. Be cautious. I will see everybody tomorrow morning with another webcast. Mike Vacchi, Princeton Trader for nakedtrader.com. Have a good one. See you tomorrow.